Welcome back, everybody. Right now it's pretty gloomy and doomy if you're invested in Chinese stocks or the EV industry in general. So I'd like to also show a couple of things to look forward to, especially in the case of NIO. So this way you can make up your mind reading all the bad news, the headlines and stuff, versus something that's rather going into the bullish case and giving you hopefully some outlook, and then you can do your own due diligence. As always, not investment advice, but trying to show both sides here. Now let's start off with something NIO specific. First of all, right now there are question marks whether or not NIO will actually achieve their Q1 guidance. That's based on the weeklies that are getting reported. There are still possibilities, but rather slight ones, that they get to the upper side to the guidance and even the lower side. We'll see, depending on what's going on Tuesday. I would say so much. My personal expectations, as I said on the live stream about NIO earnings, was 27K. It might be in the range of that. If they get up to the 31, 33, that would be fantastic, obviously. But Q1, definitely lower seasonal quarter in which we can expect a slower pace for the whole industry, actually. But in the case of NIO, and that is maybe an exception in the industry, the Q2 numbers might be looking pretty good, especially year-over-year numbers. So we might get headlines that NIO is growing much higher than other companies, and that's based because of the fact that NIO in the Q2 in 2023 had 6,000 and 10,000 of monthly deliveries, only 23,000 for the whole quarter. And that is obviously very low and had to do with some transitioning periods and things happening with NIO back then. That was a major drag on growth. Still, they came up around 30% year-over-year annual growth, and this time it could be a catalyst, because I think those numbers should be, even in a slowing environment currently, should be able to beat them and show growth year-over-year. So that's great and something to look forward to. Then obviously, also you heard about it, the Subbrand. I don't need to introduce you to the fact that NIO is introducing up to 2 sub-brands. I think one of them this year. By the way, I might be in Beijing and will be hopefully having the opportunity to look at the Subbrand if it's being displayed there. And we don't know exactly when they're going to launch it, if it's going to be a little bit later in the year, or if they are pushing it forward and have an immediate launch. But anyways, even if this sub-brand is not going to be a hit and really well accepted by consumers, I think the mere fact that NIO will be entering the 200K to 300K segment, competing with the Model Ys and so on, will be a bullish factor and increase volume. And you always see with those new car launches that you have this initial spike, so definitely gonna see some increased revenues there, no matter how well it actually manages to compete in the end. If we look at the NIO, the track record, they, in each of the segment which they have entered, like 500K plus, 400K plus, and the 300K plus, they have been either taking a top position or have been competing quite well in the top segment. So not saying that this is necessarily also going to happen in the sub-brand market segments, but it's a possibility. NIO also started to sell new models, the 2024 models, and usually consumers are waiting for the latest stuff, and then you also see usually a pickup in sales. Plus they gave sales incentives, here a couple of coupons, here a couple of free NIO phones or whatever they have, BAS reductions and so on. All of these are no price cuts on the car, but sales incentives nonetheless. So they are using that in order to generate demand. Let's hope that this will also help to pick up steam in volume. That would be great, and something that currently is not in the latest weekly numbers for sure. So hopefully going to improve the next coming weekly numbers. Then we have the kick in of the cost savings to show up in the bottom line of the earnings report. As I mentioned in my last earnings preview, I thought that this would actually happen already last quarter, but it's definitely going to happen right ahead. They did make a reduction in workforce, so there's no way that this is not going to happen. They guided for a lower capex this quarter, the coming quarter, sorry, and also what I think we could see is a decoupling of battery swap station output, so meaning building more of those while the capex is possibly going down. And that has to do with the savings, but also because of the fact that NIO has now signed up the partners, which we also have just today another news around the Anhui province, building out up to 1,000 battery swap stations. In these partnerships, we have the news from the earnings call that mostly the partners will be providing resources to build out those swap stations, so we can see possibly a decoupling from capital expenditure versus the build out of swap stations. What's just happened, I think I've commented on this yesterday, is of course worries generally how the industry will consolidate. NIO has $8 billion in runway, roughly 10 quarters at current burn rate. I think that the burn rate though will rather tighten and go lower, so the net losses should actually be lower quarter over quarter, hopefully. If that's happening, then obviously the runway will stretch out and be longer, but in the worst case scenario, burning 800 million a quarter, it will give them 10 quarters before they might have to raise new money in case of that. But there's also a possibility, not saying that it's going to happen, that with this money already they could reach break even during these quarters. And yeah, depending on how the industry is going and the development is going to happen. What's happening is, for example, with XPeng, we see Alibaba divesting their shares of XPeng, possibly leading the way to Volkswagen taking maybe even larger stake in the company, maybe upping their stake or even taking over XPeng entirely at some point. I'm not saying that this is going to happen, but it's definitely a possibility for XPeng, which currently, I don't know what's their, the road to break even, if you will, given the fact that their sales is not increasing faster than NIO, for example, and they have lower margins and lower average sales price. So, yeah, who knows? Then also Li Auto giving up on EVs, question marks. We'll see. I think they will have more attempts. I think hopefully they will be successful with transitioning to EV. However, you're seeing now from these three main Chinese perceived EV startups, it's maybe ultimately NIO who's in the leading position coming out of this year. So that's kind of one look at the consolidation. Of course, there are thousands more startups I've talked about. For example, Drizzy or Hi-Fi also, stopping their services, currently on hold. We'll see whether or not these brands will come back into the market or if they're part of those dying EV companies. And so ultimately, we'll see this consolidation. Last point before I move on to macros will be about the swap stations becoming profit centers. I saw this as a shift in narrative, hopefully happening this year. NIO is now emphasizing more profitability for battery swapping as well, and is continuing to build out those projects where they also use grid balancing as a way of income, plus monetization of battery swap stations for services provided to users. So ultimately, hopefully more news in earnings calls on the break-even metrics of battery swap stations. I think that would ultimately help this ongoing narrative about NIO's unsustainable business model due to battery swapping a lot, if that's going to change in this year. And I think there's a slight, a good opportunity or a possibility for that. Now onto the macros. Today you'll find a post by me in the Patreon community. If you're a patron, go and check that out. My commentary on the current situation, what happened overnight with the Hang Seng Index basically falling off this current uptrend. So it was about to break out of this downtrend channel, it seemed, but currently it's a setback here because the HSI has been, during the session, went down and actually retested this downward trend line here as a support. It did hold in the first place. It went up and closed here, but you could say now most likely it could lead to a further sell-off. But the bull case could also be that this was actually triggered by the weakening Chinese renminbi or Chinese yuan, and that's something which Tom Hayes from Hedge Fund Tips, actually, I had him here before on the channel, was talking about in one of his videos currently. Has to do with the carry trade of the Bank of Japan, basically a trade that where investors were borrowing free money in Japan and then making an arbitrage trade and making money elsewhere with that money. Now the Bank of Japan is hiking rates. That should lead to actually this carry trade unwinding and could actually help the Chinese yuan to becoming stronger and actually money flowing back into Chinese equities. And that is in line with what happened at the Fed. At least that's the commentary by Tom here. And I agree that take is actually fundamentally resonating with how I'm thinking about this, but what happened today is exactly the opposite, right? So it was breaking through this very important bottom line here or support line here for US dollar versus Chinese yuan strength. And Tom actually warned in his video about a possible fake out, a first wrong move that could later on unfold in another direction. As always, we don't know what's going to happen, what's the market participants' views on all of this. Anyways, I'm just saying that I think usually China will support their own currency. They are not interested in a too weak currency, but we'll see how things unfold. What's definitely some news that I haven't talked about on the channel yet, but in my Patreon community, is that interestingly, this deflation narrative could become some cracks or get some cracks. So if you look at this is the inflation numbers which have been turning negative for a while in China. So this is where all of the deflation narratives come from. But the latest report was actually ramping up quickly positively, and it's a question or not whether or not this might be the last negative inflation print that we've seen before that, and now it's all positive and it can continue from here, or it takes a little bit more time and we'll see inflation coming back in China. But anyways, the recent economic data has actually been, when it comes to energy usage or some trade data and this inflation data, it's actually indicating that the Chinese economy is picking up a bit. But ultimately, of course, the big picture is still that the economy seems to be weak in the market participants' views and the media views. And so to my last point, whether or not we get some targeted government measures, which I like to call them rather than stimulus, meaning that I still don't expect the Chinese bazooka, meaning coupon codes for consumers or whatever, or trillions spent like the US has done it, but targeted measures at different industries, for example, maybe the car industry. If we're going to see that, I think will highly likely depend also on when the Fed is going to cut, because then also, China could be more loose on the fiscal and monetary side. And the Fed has indicated that they're not dialing back on 3 hikes this year. Question is when they're going to happen and if they will stick to that. But ultimately, it was a positive that they didn't dial it down even further. So these are a couple of things to consider despite all of the doom and gloom out there. Thanks for watching and see you in the next one.